I don't know if y'all have houses, but it's getting crazy out here. So if any of y'all are following us, which is very few of you, I was trying to buy a house
Okay.
for my daughter. Figured instead of renting, I'll just buy a house. Put in a bid. I think max I got up to like a 970. It got turned down. And long story short, this housing market in Canada at least is crazy. And so I'm like, I think I'm gonna get a good deal. Winter's around the corner. Housing prices are coming down. I do 900, they do 930, 9. None of that happened. None of it happened.
So
It
they
was
wanted
almost
more
like, pardon?
than what, like
Each
your.
each one of the houses I checked, one of them is still up for sale, but all the other ones over a million. 1,030,000, 1,050,000. But my point, what I'm trying to say, this is no bubble. I literally put in offers and I didn't even get any type of counter. I
I
got one
remember
counter. That was
we had
about it.
remember we had this conversation, and I said that, and you disagreed with me then. Was I think the houses are coming to a correction because of the overinflated prices that were been slapped on these houses and this is a fault of the realtors who got greedy.
But don't you think that would have shown its light? If that was the case, then I would have gotten my house. I
Well,
would have
it's not
gotten the
going to show
house.
its light now because these people who have bought these houses at exorbitant prices or pulled out equity because the value of those houses were overinflated, they're not going to want to sell it at a loss because guess what? They owe money to the bank.
But
So
that's
in
the
that situation, as
definition
an
of,
example of where they bought the house for 400,000, the house next to them sold for $1.2 million. So when they did the appraisal, okay, you have $1.2 million, so you have $800 in equity. Oh, you know what? I'm going to pull out $700,000 and use it for something else. Maybe buy another property or go on vacation or something. Okay, well now the house is worth. Somebody who didn't pull out equity sold their house for 800,000. Oh, wait a minute, my house is now worth less, but I owe 1.2 million on this house. So it's like, I'm going to put it on the market. Okay, you come and say you want to buy it for 970. I can be like, no, I can't sell it for 970 because that's a loss because I still owe the bank this much money.
yeah, but I hear what you're saying. But I think the challenge though is that if that was the case, we would see that right now. We'd see more of that. They're called for foreclosures because at the
Okay.
end of the day, the mortgage came up to renewal.
Hmm.
It is what it is.
Yeah.
Unfortunately, in Canada, we have a disease called renewal, and I hate it. In US, when you have a mortgage, if
It's
you
for
locked in
life.
for 30
Yeah, it's
years, you're
30 years.
good.
Yeah,
Like
I know.
people that got houses in COVID,
They're laughing.
you're laughing.
Yeah.
In Canada, unfortunately, we have something called renewals every 5 years. So even if we locked in on a 30-year amortization, we have to renew every 5 years. And this is actually one of the reasons why Canada's more stable than US. We're always in lockstep with current inflation versus US can be completely out of whack because all your mortgages are backed by government securities. But what happens in Canada is that it also erodes our equity in our properties, our longevity, our ability to sustain home ownership as a way of future proofing our future, or our children and our legacy. Property appreciates, it goes up in value. But if every year every 5 years, I got to worry whether I can afford this, was because now I got to maybe sell it every 5 years. I got to worry versus in US, you bought it, that's it.
That's
You're
it.
there. As
Yeah.
long as you choose not to take equity out. If you choose to take equity out,
That's a
then you have to
difference.
get
Yeah.
reappraised, and then you're now back into the
Subject
matrix.
to the current interest rate.
But if you choose to hold on to it for the rest of your life and then pass it down to your children, then you're good. So I think it's a detriment to Canada, this housing market, and this reset is just terrible.
A lot of these guys that have million, 1.5, $2 million properties at 2% interest rate, it's not going to be that. It's going to balloon the mortgage payments. So there's no consumer confidence, and that's killing the economy. Because why am I going to go to Vaughan Mills or to Eaton Center to buy clothes or stuff in extracurricular expenditure when I have a mortgage that's going to be triple in the upcoming mortgage that's going to triple in the next few months? There's no consumer confidence. There's too much debt on the household. It's not going to inspire people to spend money on other items, and that's a ripple effect on the economy, and that's what we're seeing today. So
So
I
what's the
think I
alternative?
foresee, well, they have to drop the interest rate again.
I guess I was
Unfortunately,
wondering in terms of just like how buying houses or renting,
you
based on
mean
what you're saying.
for a new, it depends on what it depends on what your situation is right now, because if you have the money, you can buy a house, but make sure you're buying the property you're buying, make sure it's not over at the overinflated price, because there's a lot of sellers out there who still want to recoup their money because they bought at an overinflated price.
So basically, you're answering your own question
If
because you if it's
if
over, you just said it's overinflated,
yeah, it is
and if it's
overinflated.
overinflated, don't buy.
Don't buy, no. But there's some desperate sellers out there who know that the price is overinflated, but they bought, like for instance, your example of that person who bought for 400,000. There's other people that bought for 400,000. They didn't pull out equity, and they know that, no, well, guess what? If I sell for 800,000, I'm still going to make 400,000, and I've already paid down the mortgage, right? So those are the type of deals you
So
probably
do you think that
should find. I don't know.
let's add to that? Do you think that person was smart? The
Who?
person that bought that property for 400,000,
Hmm.
took no equity out, and then now potentially selling it for $9 or $1 million.
It depends on where their financial stance is and like where they are financially. I definitely would have taken out equity and done something else with it and diversified. I
Mm,
mean, that's me, right?
yeah.
But some people are not that risk. They're not that prone to taking risks. They just want to stabilize and pay off their mortgage, and that's it.
Your first house is not really an investment.
Explain.
Well, because you can't really leverage that investment a lot. You have to live somewhere. So if that usually with an investment, it's something where it's liquid. You can,
Mhm.
use it as a bargaining chip. And yes, you could take equity out. But the point is the idea, like you just said, take equity out to build something else.
Mhm.
But I'm talking about just the house. The house itself, some argue it's not an investment because you're living in it. So because you're consuming that thing, how is it really an investment? Like your stocks, you own Tesla, that's separate from you and independent from you. You can buy, sell it, you do whatever the hell you want with it. There's no consequence on you other than your bottom line. A house, can you really just get rid of it? Where are you going to live? What are you going to do?
Yeah.
So, do you agree with that statement, or
House is an investment regardless.
so you think it is an
It is
investment?
an
Your
investment. Like,
personal house that you live in.
yes,
I
it's
want to make
still an
that clear.
investment because, and the reason why I think that is because you're paying down your mortgage, whether you look at it or not, versus rent. And this is just a general rule. I'm not saying that, I'm not talking about the exceptions here. For rent, you're usually just giving away money, depending on your financial status, of course. But for the most part, generally speaking, if you can afford to buy a mortgage or you're renting, then you're giving the money away. If you can't afford to buy a mortgage and you're renting, that's different. So I'm
You
looking
can't
at it
afford a
in plain
mortgage
like,
and you're renting. That's different. Say that again.
no, no, if you can afford to buy a house but you're renting instead, then you're just giving your money away. I would rather you buy the house and pay down your mortgage, because now you're building equity on that house, which is why I think a first house is still an investment if you can afford it. So all I'm saying is renting versus buying, I would buy a home if you can afford it. So I still see that as an investment.
I look at it like a pseudo investment or an investment on training wheels. What you're saying is you're paying into a mortgage. That's forcing you to pay into this investment. I think a mortgage, that's someone telling you and you're fearing in doing this because you don't want
But
to default on your mortgage.
I would
So
argue
that's
that's
why,
more discipline, because now you're structured payments and you know that you have to do a certain thing at a certain time of the month. So
no,
you,
I
no,
think it's once
that's
again programming.
you
It's
can call
it's
it programming, but it's
somebody
discipline
telling
though,
me
man.
somebody telling me what to do with my money. So I argue, this is why I said training wheels. Again, if think about it, Jai, you're a grown ass man. Imagine someone telling you, wake up, I want you to get on and put this and brush your teeth first and do this.
Is it helping me build my future?
Okay, then fine. If you want to be controlled and
It's not
you
about being
and you want to
controlled.
be sucked into the matrix
It's not
and
being
be
you
controlled
still
and have
it's not
that
about
sense of security that you come home and nothing You
No,
have to
but
worry about
it's a
nothing.
choice you have to make though, because it's not about being controlled. If you look at it, you sit down, you analyze it, and say, okay, this person, what this person, it's not the message itself, or it's not how the person portrays the message, it's what the person is saying. Does it make sense for me? So in other words, you
So
might
you're
say,
saying you would, if they gave you an option, okay, you could either pay this off on your own time
uh-huh.
or pay it on our time. You're saying you would just say, you know what, I want you to tell me how to do this.
No, no.
Okay,
I like if you give me, but you give again, you're giving me the choice. You
I'm
can pay
just
it on
trying.
your own time, or you can pay it on our time. Okay, what are the options? If you pay it on our own time, this and this are the advantages, this are the disadvantages. If you paid in your own time, this are the advantages and this are the disadvantages. So I can make that choice and say, okay, you know what? I think I stand a better chance of paying it on your own terms because I like the advantages you're pointing out. Or I could decide to say, yeah, I don't like it. I'm going to do it on my own terms. It's a choice.
Okay, but what I'm just saying is this is why I didn't say it's not. I said that's why I said it's an investment on training wheels,
Hmm.
right? You're being controlled for a reason because more often than not, people will not be able to maintain the payments consistently over 30 years. But what I'm just trying to say though is at the end of the day, if you really want to be an investor, true investment, that's what it's all about. So the reason why I brought it up is because remember I started this off the top with renting or buying.
Hmm.
The idea is that instead of putting all your money into a mortgage, you are now going to rent below your means, take that same money that you put into a mortgage, and now buy stocks. Now buy stuff that trail against the S&P. If you look at stocks over time, on average, house gains 7 or 4%. Stocks gain 7 to 18%. This is all I'm just trying to say. You get it? Do you get where I was
Yeah,
going
I
with
know.
that?
I get what you're saying. You're
So
saying
if
that.
the,
So, in other words, so let me ask you the big question then. So, why did you buy property? If you knew that stocks were the way to go and they trade for 7 to 18%, because by your logic, you shouldn't have bought properties.
you're right, and I'll tell you
So,
why.
okay.
Because I didn't have anyone telling me what I'm just telling people now.
But you can sell your properties.
And you're right. If I had to, I would.
Yeah.
The trick though is that I make enough where I can do both. But that's
So
what I'm
why did
doing,
yeah, okay.
right?
So
So
it's not
I could have.
so it's not a bad idea to advise someone to start by because you have to remember there is a lot of risk with stock, especially when you don't know how to do it. Now
Got ETFs.
you might call it,
Got
yeah,
ETFs.
yeah, but you might call it
Mutual
program.
funds.
I would say more often, more people are focused on less taking risks less than people who want to take risks. There are more people out there who would rather not take any risks than people who would take risks. That's why you have a disproportion of billionaires and millionaires because those are the ones that know how to take risks versus the average person. So what does that tell you? When you're telling people to not buy a house and invest in stocks, I don't know that that's necessarily. I don't know. I don't know. I don't
I'm
know
not saying
that's
that. I'm saying that again, the question was rent or buy. And you
and
made a
I'm
great point. You
yeah.
made a great point that you're throwing your money away. I'm saying not necessarily. If you learn to control your money, be
Hmm.
disciplined, you live below your means, and you take that money because rent will be cheaper. Rent typically is cheaper. You can control that amount of money that
Hmm.
you're paying in towards your living. Take the remaining and put into something that's higher yield investing. That's my point.
Okay,
That's all I
fair
was just trying to
enough.
say. I'm
Yes,
not saying not to buy a
I
house. I'm
hear
just
you. Yeah,
saying,
I hear you. I hear you. But most people are not disciplined when it comes to
okay,
money.
so that's all you're, so once again, so
Yeah.
that's why I say a mortgage is training wheels. It's investing on training wheels. So by that definition, I argue hardcorely, it's not investing at all. Your first house, and
Okay.
specifically the house that you live in, because that's what you worry about the most. Now, if you buy a second house, and then that's your income and that's your rent and stuff, that's different because now it's liquid. You can get rid of it. You can keep it. You can do whatever you want. But I don't know. I just think that's. But do we gotta end it
Yeah.
or
Pretty
okay?
much. Yeah. But anyways,
All right.
my point is this.
Kevin's right as usual.
This guy, man. I don't have any comments, but just yeah, don't
Listen to Kevin.
yeah, don't listen to Kevin. Guy would just you would just go and buy stocks and and you would cry the next day. If you have money, just talk to a financial advisor. How's that?
Even then, talk to a financial advisor that is not tied to a big bank.
Yeah, of course. I
Okay.
agree with that.
Finally. All right, guys. It's been a pleasure, guys. Again, like and subscribe. Let us know what you think, your thoughts. And we'll see you in the next one. All right, guys.